You think banks are just friendly places that keep your money safe? Think again. They're quietly making money from almost every move you make. And the way they do it will surprise you. First secret, they lend your money. Sounds fair, right? You put money in, they lend it out. Simple. But here's the twist. They lend it for more than they pay you. You get a tiny interest on your savings. Borrowers pay big interest on loans and mortgages. The gap between those rates? That's pure profit for the bank. Small for you, big for them. Second secret, fees. Opening an account looks free, but later you see fees everywhere. Monthly account fees, ATM fees, overdraft fees. Miss a payment? Late fee. Want a paper statement? Fee. Each small charge adds up, and banks rely on millions of customers paying dozens of tiny fees. It's like a slow tax you barely notice. Third secret, credit card interest and penalties. Swipe now, pay later sounds perfect, but if you carry a balance, interest explodes. Cash advances? Even worse. Miss a payment and your rate jumps. That's where banks make obscene money from people who can't fully pay back. Fourth secret, interchange fees. Every time you use a card, the merchant pays a fee. Part of that fee goes to the bank that issued your card. You don't see it. The store pays. But stores raise prices. So, indirectly, you still pay for it. Sneaky, right? Fifth secret, overdraft and returned check fees. You think overdraft protection is a safety net. It's a profit engine. Banks charge hefty fees when you spend more than you have. They also charge if a check bounces. One wrong tap, one small mistake, and the bank cashes in. Sixth secret, the float. When you deposit a check, banks don't wait to use that cash. They use it immediately to make loans or investments, even before the money officially clears. They earn from it. You get the illusion your money instantly exists. That time gap is money in their pocket. Seventh secret, fractional reserve banking, the big one. Banks only keep a small portion of deposits on hand. The rest is lent out. So your $100 can support much more than $100 in loans. It creates wealth for the bank and risk for the system, which you eventually pay for in crises and bailouts. Eighth secret, selling your data and products. Banks know your habits. They see where you spend. They sell targeted offers. They push loans, credit cards, insurance. Commissions and referral fees mean more income. Banks often make more from selling products to you than from storing your cash. Ninth secret, securitization and investment. Loans aren't always held by the bank. They package mortgages or loans into bundles and sell them to investors. Banks make fees from creating and selling these bundles. They also invest deposits in the market. If markets go up, banks profit. If they go down, you might still feel it. So what can you do? First, read fees like a hawk. Don't ignore the small charges. They add up. Second, avoid carrying credit card debt. Pay in full when you can. Third, shop for better rates. Not all banks are the same. Fourth, build an emergency fund so overdrafts don't happen. And finally, ask questions. Demand transparency. Banks do important work. They help the economy run, but they are businesses. Their job is to make money, often from you. If this opened your eyes, hit like. Want more videos that show the tricks the system uses? Subscribe and ring the bell. Share this with someone who still thinks banks are just safe places, because knowing how money works is the first step to keeping more of it.